Yeah. All right, it's March 8th, 2023, 7:05 p.m., unfortunately. We're going to go ahead and call the Finance and Revenue Committee meeting to order with myself, Nick Allen, Bernie Flynn, and Brian McGinnis. Item number 2 is comments, suggestions, petitions by residents in attendance regarding items not on the agenda. Alrighty, seeing none, we'll move on to our discussion items. Item A is our February 2023 financials.
Good evening. Starting with page 2 of the report, the February 2023 cash balances, we started the month with $15,027,826 in cash. We brought in $4,186,543. We spent $3,394,55, and this resulted in our ending cash balance of $15,823,914. Of that amount, $1,446,021 is for general fund operations, and the other $14.4 million is for special purpose and enterprise funds. Moving over to page 2, please. The budget to actual summary by department for the year ended. We had actual revenues of $5,729,764. This is offset by actual expense of $5,684,22. This resulted in a net income across the funds of $49,342. It is important to note that at this point in time, the general fund is operating at a net loss of $1,385,651. The enterprise funds, both the sewer and parking, are operating in positive positions, which offsets the general fund's net income. Looking at the overview for the year ended February 28th, the first 2 months of the year are lean and have been lean. This year, we are operating solely on our earned income, our EIT, our LST, our budgeted transfers, year-end cash reserves, and the ARPA funding for the capital projects. The general line items should have about 83% of their budget remaining at this point in time. We did use $61,000 of ARPA money to fund projects that are already in process for 2023. Both the admin, IT, and building and housing have no issues, but looking at the police department, I did want to point out that we received our first payment on the East Bradford police contract. That amount that we received was $420,525. Looking at the overtime, which is always the big expense in their department, that is meeting budget at this point in time. Moving over to Public Works, their overtime is meeting budget at this point in time as well. Equipment repairs is trending high again this year as it was last year. At this point in time, they have 73% of their budget remaining. Park repairs is also trending high as well. There was an emergency service repair that was done at Everhart Park for $5,600, which ate into the $10,000 budget that they have for 2023. Moving over to the sewer fund, revenues are meeting the budget at this point in time, but on the expense side, we are seeing the overtime creep up. The overtime budget at this point in time is at 60%, and we are seeing both fuel, heating oil, polymer, and soda ash, which is trending higher than what we would expect. Moving over to parking, we did receive the past due parking garage revenues that were not booked. So garage revenue is meeting budget at this point in time, as well as the expenses and revenues in that fund. And then the stream protection fund, we have booked most of our revenues for the year. We have about 28% remaining, which will be hopefully collected by year end. And then anything that's not collected will move over to Portnoy for collections. The big expense in the stream protection was for the Greenfield Park repairs. We paid out $131,000 for this project year to date. Are there any questions?
Questions?
Yeah, I have one question about the Everhart Park unexpected expenditure. Was that for the tree that fell down?
It was for an emergency water service that was done by DeRocco Brothers.
Okay. Thank you.
Mr. McGinnis?
No.
I did not have any questions on the financials. Any public comment about item 3A? Alrighty, seeing none, we'll move right ahead to item 3B, which is our 2022 capital expense and ARPA funding review.
I'll handle this. So this is a discussion item. We were hoping it would be an action item, but we're not quite there yet. We need another month to do this. But typically, a March or April meeting every year, we reconcile our capital projects for last year. That means we amend our existing year budget to include both revenue and expenses for anything that was budgeted for last year but not completed. There's really 4 projects we're looking at. The 3 streetscape projects, Greenlight Go, Downingtown Pike, and the High Street and Minor Street intersection, as well as a HVAC project at Taylor Run, the control building, which we put out to bid late last year, and the bid was twice what our CoStar's quote was, so we decided we would rebid it this year. We also need council's approval of the roof contract until we can really put together a clear a reconciliation project for that. So just wanted to put that on your radar. We're working on it, and we'll have it for this committee next month. Leave anything out, Barb?
Thank you. Any questions? Any questions? Public comment, questions, concerns? All right. Thank you for your clarification. I appreciate that. Item 4A is one I'm particularly excited about. This is to approve writing off the general fund internal due to fund balances.
Could we start with page 4, please, Jeff? So I know the attachments that I put up here had a lot of numbers, but I'd like to walk through everything, and I've kind of broken everything down into 4 main categories. The 4 main categories that I want to talk about are what are interfund liabilities, how are interfund liabilities created, what effects do the liabilities and transfers have on fund balance, and how did we get here? We will follow that with a walkthrough of the statement of net income, revenues, and expenditures, and then we'll look at the balance sheet to see the effects of these interfund liabilities on the fund balance. I will say that the ask for tonight is that I am asking the committee to consider approving the write-off of $6,586,680 in general fund internal liabilities. I believe that by writing off these liabilities, we will be able to eliminate our negative fund balance in the general fund, and as well as ensure that our current assets will be sufficient to cover our current liabilities if we were to close our doors tomorrow. So looking at this reconciliation that you have before you on page 4, one of the tasks that I was given by Mr. Metric for 2022 was I was instructed to maintain the interfund liabilities and make sure that all of the activity was maintained each month so that the balances we started with would never exceeded what we began the year with. So looking at this reconciliation, we started the year, get my sheet here. We started the year with $6,871,074. This is the same number that ties to the balance sheet, the little section that says A under the current liabilities. We ended the year with $6,422,935 in current interfund liabilities. This is unaudited at this point in time. So starting with the first question that I talked about before, how are internal liabilities created? We've always had interfund liabilities on our books. The issue is these liabilities have increased significantly over the past few years and are now negatively impacting our fund balance. How are these internal liabilities created? So typically an interfund liability is created when one fund pays an expense on behalf of another fund or books a deposit on behalf of another fund. Some examples that I can give. Our payroll, we process our payroll biweekly. That amount is debited from our general fund. but our payroll covers our police, our admin, our wastewater, and parking. So those funds have an internal liability that needs to be satisfied for that. Our fuel usage cards, the amounts that we pay each month, those are also debited from the general fund. And again, they apply to all of the departments in the borough. We have our PICO, our Aqua, and our Verizon utilities that are debited from our general fund that again apply to the different buildings that we own, parking, wastewater, and fire. Both the housing and the parking department use the same handhelds that they issue their violations from. The customers that receive those violations can go online on our website and they are directed to a portal to pay those payments through United Public Safety. Those amounts that we receive for those payments are deposited into our parking fund. The parking fund then would have a liability to the general fund for the housing portion of any payments made for trash violations. And then finally, the two district courts, we receive checks from them each month. Those checks are for police, parking, and housing violations. Those deposits are typically booked into the general fund. And again, the general fund would owe the parking fund a liability for the parking's portion of those violations. So what are the effects of these liabilities and budgeted transfers on the fund balances? Budget transfers are revenues for the receiving fund and expenses on the paying fund. The expenses are netted against the revenue and that flows through to fund balance on the income statement. On the liability side, the interfund liabilities, the only way that these liabilities can be satisfied is if the interfund activity is reconciled each month and money is moved to satisfy those liabilities, or we can write the liabilities off through a write-off to fund balance. How did we get here? So during the time frame of 2015 to 2018, the accounting for these transfers was done differently than what we are doing currently. Monies were being transferred to satisfy both the liabilities and the transfers that were budgeted. However, these monies that were being transferred were all booked to the liability account instead of allocating to the general fund's portion of the transferred revenue line item. This miscoding in our accounting system caused the general fund to not recognize transfer revenue, and this resulted in the increased liability balances and the negative fund balance that the general fund currently has. The impacts of the general fund's negative balance can be seen on our bond rating that we were downgraded to last year. Last March, Standard & Poor's issued a report that downgraded our bond rating from AA to AA negative. And I just want to read a section of the report that I think sums up the general fund negative balance and what the impacts are on our financials. So on page 2, under the rating action, the rating action reflects our view that the borough's financial profile has weakened as a result of deficit general fund operation and decreasing reserves. Over on page 3 of the same report, the downside scenario, we believe that there is at least a 1 in 3 chance we could lower the rating over the next 2 years if the borough is unable to produce balanced operations in the general fund, thus causing reserves and liquidity to significantly deteriorate. If we could move over to page 2, please, Jeff. I just want to walk through these statements so that we can see how these liabilities are affecting our bottom line. So I'm going to start with the statement of revenues and expenditures and changes in fund balances. If you look under the revenue section, you'll see that in 2021, we had total revenues of $17,411,063. We had expenditures of $18,129,626. This results in a net loss of $718,563 before transfer activity. The net transfer activity yielded $1,980,074. So if we net the net loss against that transfer activity, we have a net income of 1,261,511. We started the year with negative fund balance of 7,535,508. Netting that net income against that number, we have an ending fund balance of negative 6,273,997. Moving over to the balance sheet, please, on page 3. Our general fund has current assets of 3,137,306. This is not enough to cover the current liabilities if we closed our doors tomorrow of 8,886,051. So to sum this up, I think the big issues are 2. The general fund has a negative fund balance that I think we can resolve if these balances are written off, as well as ensuring that our current assets are enough to sustain current liabilities if operations were to cease. So I know that's a lot of information. If there's any questions, if I can provide more insight.
Great. Thank you. Quick questions?
Yeah, I got one question about the transfers. What you said that one fund would, could be charged to another fund. For example, the Parks, Mr. Karowski's here, so we'll pick on him. The Parks and Rec Fund, right? So if he overspent the money that he had as line item, and then he asked Public Works to go do work for him, would that, is that's why it results in a negative number?
So the Parks and Recreation Fund is part of the general fund. What I'm referring to is more to the enterprise funds, wastewater, sewer, stream protection, those sorts of things. So if there was a line item that was overspent in recreation, that would kind of just flow through the normal revenues and expenses of the general fund.
So the main problem that we really have is the sewer fund.
Correct. So in a nutshell,
So,
this,
let me ask you a question.
sure.
I whistled just like Perone did. That scares me. I'm starting to whistle. I have to stop. If the sewer fund, if they transferred $3 million out of the sewer fund, where do they put the money? Into the general fund?
Well, it depends on what the liability was. So it could have gone to the general fund, it could have gone to the parking, but there was liabilities that the sewer fund owed to the general fund. So those monies would have been transferred to satisfy those liabilities as well as what was budgeted for that year. So yes, most of it went to the general fund, those transfers.
Okay. So the previous administration basically used the sewer fund to balance the budget.
I don't know if that's necessarily a fair statement. I will say that it was a misclassification in the accounting, in the books. The money should have been booked to the liabilities to satisfy all of the examples of liabilities that I spoke about, as well as what the budget was for that year. And then anything that may have been over that budgeted amount should have gone to that transfer line item instead of the liability line item, because the transfer line item will roll into your fund balance where the liability sits on the books. And then we have these balances that, you know, can increase from year to year if they're not satisfied.
Right. Remembering the last 3 audits that we've had, the auditor has recommended 3 years in a row for us to write off this wastewater transfer, and we've neglected to do it for some strange reason. We just, we hate to use the word, we never just got to it, but it's time that we actually get rid of that money, that liability at this point. So thank you.
Mr. McGinnis, any questions?
No.
Okay, great. I think we're good. Any public questions or comments? This was a lot of hard work, so thank you. Really appreciate it.
Thank you.
It's nice to see a year-long effort come to
Thank you.
fruition like this. So we can go ahead and recommend this 3-0 for Tuesday.
Thank you.
Item 4B is to approve our grant resolution for the Westchester Racket Center rehabilitation.
Especially, there it is, my microphone's working. So this is a grant resolution. We send all grant resolutions through the Finance Committee as usually there's a commitment to future spending involved. This resolution, there's no dollar sign. It's really just protocol of signing the document. But anyway, what we're doing, we have a April 5th deadline. This is a project which is long overdue. These are pictures from last week, cracking in every single court, playing surface around the sides of the court. What we intend to do project-wise is basically start from scratch, lay a new base of reinforced concrete, resurface, repaint the courts, new ADA amenities, both access to the courts and parking. That's just a good idea, but it's also a requirement of the grant. And then also we've had really good reception about our 2 pickleball courts that are temporary. And so the idea is to make them permanent on one side of the facility. Project's been reviewed with the Friends of Hoops Park, Rec Commission, and everyone's on board, and we're excited to get this done. There's been a lot of talk about the Parks Master Plan, and looking at this and our capital plan, this project jumped out as something that is not going to get reshuffled regardless of the outcome of the master plan. It just simply needs to get done. So if we're successful in this grant, we'll have $60,000, $70,000 more to implement what comes out of the master plan. So I'm trying to get away from thinking about grants for specific projects as like just for that project. It's really about opening up those dollars to spend elsewhere. So hoping we can get council support and move forward and submit this next month.
Any issues or questions?
Mr. Kurowski, this is a complete tear out and rebuild, correct? Okay, very good. Thank you.
The hopes are of essentially staying with the guts of the corridor.
No question.
Okay, great. We can call this a 3-0 unless there are any concerns from. No? All right. Cool. And then 4C is our minutes, which I had no issue with. And then under other business, I will just briefly say that we are working still just, I've been getting like emails about the stormwater update with like pending legal matters and all that stuff. We are still working on it. There's a lot of, correct me if I'm wrong, but there's just a lot of data we're still collecting just to get a crystal clear picture of what kind of policy choices we might have to make in the future. Just want to make sure the public knows we are aware and we are still working through those issues. Great. Thank you for that update. It's very helpful. Any other business? All righty. Seeing none, we'll go ahead and adjourn at 7:31. Thank you.